right, let's talk about a year ago. When I look at what happened with GameStop, when I look at with AMC, I see many not like-for-like situations. I think some people have more information than others. I think some people weren't in on it, so to speak. I also see kids who were playing Candy Crush, and they got this fantastic app from Robinhood, and they said, this is even more fun than video games. All these areas need at least more sunlight. Again, how do we fix what could again happen from last year?
I think that we learned a lot of lessons from that. We have multiple projects. One, let me talk about the Candy Crush, if I might. We're in a modern time that we're bombarded. We Americans are bombarded every day by prompts, behavioral prompts. Do this, do that. We find it in every day. But in finance, the brokerage apps, the robo-advisors are doing it as well. And I think that we have to be aware that their motivation is to make more revenues for that startup or more money for that application and that business. And we have a basic idea in America that they should be making advice and recommendations to us for our benefit. So I think that I would say to you all, the public, as you're investing, beware that they're trying to get you to trade more often. That's their motivation. And statistics usually show that investing is good, but trading often is not. Secondly, there's a bunch going on with regard to the market structure. Are the brokers really trying to actually get best execution? The best execution for you means putting brokers in competition for your order. And that's a really important thing. So
we are not a product.
We're also looking at the basic plumbing,
PFOF,
the settling part of the market to try to
God, it pisses me off.
Lower the risk there and help protect. Remember, a year ago, a lot of retail investors were shut out of the market.
Right.
And that's not good. Access to our market is so important. And I think we can do some things in what I'll call the plumbing.
All right, so Gary, let's say I decide I'm going to go 5% short XYZ Corp. Why don't I have to disclose that day? What's the secret? Why 10 days? That gives 9 days where you and someone else have the edge. We don't want edge. We want instant look at what's happening. Why don't we just wave the wand here? Make it that day.
Well, we at the Securities and Exchange Commission have process and laws and everything, but we are looking to put two things out to the public to try to change our rules. And one is about short selling, and one is about the insider disclosures. Around short selling, that you'd have more information in the market that companies and the exchanges have to put out there. And I'm hoping with support of fellow commissioners to do that. Another thing is to shorten what you call this 10-day window that large holders over 5% have to put information out. It's been 50 years since that rule has been put out there, and a lot's changed in the 50 years to maybe look at shortening that.
Well, okay, so when I think about what happened last year, I recognize the people who are still angry. They were shut out on a given day, whatever. But at the same time, we had a kind of weird capitalism going on. We were ganging up against short sellers and a couple of stocks that kind of went crazy. Good or bad for the market that we got so many people involved and you had this GameStop go to 400? Is that good or bad?
But I'm not going to speak about any one company's valuation, but I think it's good to have more of the public of every generation thinking about their future and investing in this great thing of America, the capital markets and the companies that stand behind it. But the constant daily prompts and motivations to trade more generally lowers returns to sort of do the day trading and the like. And so that's why I've asked staff for recommendations about the predictive data analytics and the behavioral prompts and what some people call gamification, or you said the Candy Crush of the capital markets.
All right, well, we got to, here's what I'm stymied by. I, too, want everybody involved. But when I look at Robinhood, which is a place where a lot of people got in, I see people tell me, look, it's commission-free. That's why I did it commission-free. But the whole concept of commission-free, it doesn't really exist. Or we should be shooting for something.
No, you're paying for it. The public is paying for it because what's happening is a number of brokerage apps are getting paid for your order flow, and then they're not
Yeah.
putting your order on the lit markets, it's going to the dark market. So if you put what's called a market order in to one of these brokerage apps, it doesn't go to the New York Stock Exchange or NASDAQ or something. It
Serious, it's fucked
invariably
up.
goes to a small handful of internalizers, what's called wholesalers in the dark market. And so we're really looking hard, and we're working hard with the economists on how we can
Fucking fix it.
raise the chance that you, the public, you really get competition and get thus the benefit of that competition and best execution.
One last question. I'm trying to figure out.
How about ending
I
it?
have a friend
Ending
who works for a
PFOF.
consulting company. And he
Fucking
said, look,
fuck.
what's going to happen is every company's going to have to do ESG disclosure. The SEC is going to be overwhelmed. They're going to need auditors on ESG. Is that how it should go? Give us advice about how we can be sure that it's not greenwash.
So two pieces of this. One is the companies raising money from you. We now live in a period that many investors, measured in the trillions of dollars, want comparable, consistent data about climate risk, the strategies, and yes, some of the greenhouse gas emissions. The second thing is the funds, these mutual funds and asset managers who are saying, hey, come hither, invest with me, we're ESG. I think in that second area, we also have work to do to make sure that there's some truth in advertising, that somebody stands behind, just like when you go in a grocery store and it's fat-free milk. What stands behind that? So we're trying to do rules in that area as well.
Yeah, talk's cheap, man. That's you've been talking.
This greenwashing. So
We're trying. Woohoo.
Just as you know what stands behind when you say it's a high yield bond fund, you know the details. Or when you go in a grocery store and it's fat-free milk.
All right, well, look, let's do round tables. Let's go around the country and do this. You and me, whatever else you want. Teach people. We can teach people. You and I have been around a long time. We can without picking on any security or any particular firm, we can help educate people so they don't lose a lot of money. Because you and I both know that's about what's happening.
He's drunk,
right now.
Barb.
Well, it's part of our jobs. You have a different job than I do, Jim. We've known each other probably
He's
20 some
drunk.
years. I'm going to keep doing what I'm doing on behalf of 330 million Americans and try to make the markets fair for regular folks.
Well, look,
and that's what we do. Investor protection. We look out for
Win!
capital formation, and that what's in the middle. Fair, orderly, and efficient markets,
Yeah.
trying to drive more competition.
Run your mouth,
but
buddy.
also make them more fair.
Blah,
And
blah,
it's gonna help
blah,
investors,
blah,
and it's going to
blah.
help companies raising money.
I'm going to do
Jesus,
my end.
fuck
I'm doing
you.
the things on my end that you're doing on your end, and we can make it so that people are more informed so they make better decisions. That's all we can ask for. Chairman Gary Gensler, SEC. Thank you so much, sir.
Piece of shit.